Hello, I'm Tammy Green, and this is your Week in Forex from MaxiForex. Today, we will review last week's market highlights. There was a big announcement by the European Union as Greece's financial aid seems to have arrived at last. There are many speculating that this bailout may not be successful. The Forex market is showing volatility right now, which is not revealing a real trend. China is continuing to expand, which has caught the attention of Ben Bernanke, who is trying to interfere with China's yuan rates. Today, we will review these and other issues with financial analyst Martin Smith. Welcome, Martin.
Hi, Tammy.
So with all of the concern about Greece, and we've discussed it endlessly, has the euro taken a hit?
Well, the $61 billion rescue plan for Greece doesn't seem to be enough to truly restore the credibility of the euro, I'm afraid to say. The dollar gained for 5 days against the euro because of serious concerns, and it weakened versus all but 2 of 16 of its most traded counterparts. Also, the bond spreads have spread again, despite the new rescue plan that they have instated.
Who is actually contributing to this rescue plan for Greece?
Well, currently the parliaments of Germany, France and Ireland are preparing to vote on whether they will contribute their share of the EU loans. This is again raising concerns that Greece will get the support necessary to fund their budget deficit, which is currently 12.9% of gross domestic product. This, by the way, is the biggest in the euro's short history. Now, this is why we have seen the euro drop 5% against the US dollar this past year. People aren't sure that the EU leaders will be able to prevent the fiscal crisis from spreading to other members of the Union, specifically already struggling Portugal.
I still don't completely understand why the euro is falling despite this new rescue plan in place.
It's quite simple, really. People don't believe that it can really create a real recovery for Greece.
But shouldn't we have still seen some better results?
Well, the decline accelerated as investors exited bets on the euro as it failed to keep rising in the wake of the loan package announcement. See, the market moves on speculation. Future traders had record bets last month that the euro would fall, with a difference in the number of wagers by hedge funds and other large speculators on a decline in the euro compared with those on a gain, so-called net shorts, and these reached 85,326 on March the 30th.
Of course, the next most popular topic right now, besides Greece, is China. Is there any news out of China?
Well, Ben Bernanke, the Fed chairman, is promoting change in China. They need a more flexible currency to keep their inflation under control. They are the world's third largest currency, behind only the United States and Japan. Now, most economists are in agreement that the yuan is undervalued and is being used to promote China's exports. If they do decide to allow more flexibility into their exchange rate, which is recommended, it would give more autonomy to their monetary policy and they could nip the inflation issue in the bud.
What is the big deal about China allowing inflation?
Well, China has placed its currency at about 6.83 to the dollar since about July 2008, which some members of the US government claim is giving them, the fastest growing major economy, an unfair trade advantage. I mean, to directly quote Barack Obama from last week, the yuan is undervalued and should roughly track the market so that no country has an advantage in trade. China's currency should have more market-based valuation.
Before we finish today, is there any news on the pound and the election in England?
Yeah, a poll showed that the opposition Conservatives are leading over the Labour Party, so the pound rose against the euro. Now, this is easing concerns that the upcoming elections next month may produce a government ill-equipped to cut the deficit.
Any technicals for this week?
A couple. Let's discuss the euro loonie and the pound yen. Now, the euro loonie, after taking a drop, appears as though it will produce short-term bulls. It's been in an oversold mode and is now starting to cross back up. The pound-yen was unable to breach the line of resistance. It just touched the 38.2% Fibonacci level, exactly to the pip at 143.91. It then proceeded to bounce straight back down.
Well, thank you, Martin. It was nice to see you again. Until next week, I'm Tammy Green, and be sure to visit us at maxiforex.ru.